This strategy is the closest you're going to get to a 100% winning rate strategy. This is because we're not using hard traditional stop losses, we're actually just riding the waves of the market. We're letting the big players in the market move our positions into profit. Our edge over the market is the market moving. Have a look at this. Literally 4,500 back tests. Not one lost money. Yes, this strategy has an extremely high win rate. However, this is no get rich quick gimmick. In this video, I'm going to break down everything. Oh, and by the way, I've like 90% automated this strategy. Let's get into it. First things first, I'm going to explain what we're doing briefly. We are mean reverting the markets. AKA, when we see price is stretched far in one direction, we know that there's going to be a pullback or a profit-taking move from the big banks and financial institutions at some point in the future. We don't actually know when this is going to happen. There's no issue with that. And that's actually the main reason why I like this strategy. You don't need to time the markets. You don't need to predict the markets. Even if you're wrong, you can end up being right and making money. So we're going to add our position when we see that price is stretched in one direction. And if we're wrong, we're just going to add to our losing trade, which in turn is going to bring our average price with us, giving us really good entries. I don't use hard traditional stop losses, but I manage my risk differently and I'm very strict about it. I use small lot sizing and multiple entries. This way I don't have to worry about timing the market. I also use close targets so that I'm in and out of the market quick, helping me constantly bank money. I use custom indicators and a trading bot that I've developed to pretty much 90% automate this strategy, mainly helping with lot sizing and getting entries when I'm not at the computer. So as you can see, the market just moves in legs, up and down and up and down. That's just what it does with these currency pairs. And where price is right now at the moment is actually right in the middle of the chart, which is a really good example. We're going to mechanically see when price is stretched too far up or too far down, aka it's oversold or overbought. We're going to do this by having a look at the RSI, or the relative strength index. You can see that when the RSI is stretched below or above our levels, which are these yellow lines, price usually has a pullback pretty soon after that. So you can see over here we were actually stretched by looking at the crosshair, and you can see that yes, price did move against us for an extra day, but then it moved up with us for like 6 days after that. You can see we're stretched down here, nice move up. Stretched down here, eventually we had that nice move up. We're above our levels, so we come down. Above, come down, above again, come down. Let's look more in depth at an example. So the bot's going to work off two confluences to give you your entries. The first one being a higher time frame RSI extension, and the second one being a moving average cross on a lower time frame. This is a really good example here, and this is a trade I actually took. I want to use this red line to represent my average price. Over here you can see that I was extended above my levels right here. I would have had a moving average cross on a lower time frame, thus giving me an entry. My first entry would have been right here. Price continued to move against me even though it was stretched up. So I had another cross here, another cross here, and I actually entered on this double top, a fourth position. What's this doing to my average price? If I entered one position, my average price would have been here. It did eventually come back into profit, but I want to get a better entry than that. So as I entered to this trade that was losing, I entered positions in, I brought my average price up with me. If these two positions were the only two in the market, my average price would have been in the middle of them. However, I added a third and then a fourth. Now my average price is close to the very top of this mean reversion move that I was expecting, because I've seen that the RSI is stretched. That's the preface of it. We're manipulating our average price and bringing it with us to get us the best possible entries without having to time the market. Since we're not trying to time the markets, we're entering with such tiny lot sizes to the point where price can move against us for days and it shouldn't bother us. Risk management with this strategy is absolutely vital, and you have to take it seriously. If done incorrectly, say goodbye to your account. And if done correctly, say hello to nice profits. And yes, this was a 15-year test. I've tested through everything, COVID. This is one of my many strategies I have in my Discord. So click the link in the description and see some of the strategies that I'm running. As I said before, this is no get rich quick scheme. You're going to make money based on how much money you can put into it. 86% return on $1,000 is $860. You're not going to become crazy rich trading with a $1,000 account. It's just not viable. A lot of people online will try and sell you the dream, telling you that yes, this guy joined my group and made thousands of percent. Once you dive into that rabbit hole and you've been in the industry for a few years, you can see how blatant and cunning most of these gurus are. I won't sell you the dream. I'm going to tell you straight up, you need money to make money. Let's move on. Let's have a look at it in the back tester. We've got our data box over here so you can have a look at the drawdown as it plays. And I always recommend back testing stuff yourself. I've made a whole video on this already and it goes really in depth into MetaTrader for back testing. So I do recommend checking that out. Over in the middle of the screen, you can see our RSI. This is our RSI from a higher time frame. Right now, I have it set to the 4-hour RSI. And right now, what we're looking at is the 15-minute chart. So we have our higher time frame and our 15-minute chart. At the moment, RSI is floating in the middle. It's not stretched up or down. So we're not going to take any positions. Until this RSI gets stretched, then we can start looking for our entries. We'll let this play out for a little bit. And the levels I have set are below 30 or above 70. So you'll see, we've just come below our 30 level. And price moved up for take profit. Now price is sitting directly in the middle, 50 RSI. We're not going to buy or sell because price isn't stretched in one direction. It's just kind of floating in the middle. We just ticked above 70. Plus we've had our moving average cross. It's our two confluences. So we add a short position. Price comes down, take profit. Now we're flying it in the middle again. I want to see an example of it going against us. All right, we're in one position here because our price is stretched up from a higher time frame. Price has gone above our minimum spacer, this white line. However, we haven't actually entered another position because we haven't had a moving average cross above our minimum spacer. I'll keep playing this in slow-mo. We just had another cross, so we enter another short position. Notice, our first position was 0.05 lots. Our second position, 0.06 lots. So it's actually slightly bigger than the first position. If both these positions were 0.05, our average price would be right in the middle of these two, somewhere about here. Since this second position was gradually larger than this first position, our average price is actually going to be brought slightly closer to where price is at the moment. This helps keep our average price with us. Let's carry on playing and see what this does. Price moved against us again, and we added another position, gradually bigger, 0.08, and we're sitting in about 1% of drawdown. Price has moved against us once again. We're in about 1% of drawdown still because our average price is moving with us. So we're in 4 positions at the moment. Every time we add, our average price moves up with us. At the moment, I'd say our average price is somewhere about here. So price just has to move to here for us to be break even, and a bit further for us to be in profit. Keep playing this. That wasn't our average price. There you go. And we get out with a profit. This is actually an excellent example of how I trade. Now for this example, I was using 4-hour extensions. I usually use daily extensions. So my first entry of the daily would have been way higher, maybe this one. For example's sake, let's dive into this trade. So our first position was here, second, third, and 4th. In the backtester, this would show you as a 50% win rate. You had 2 losers here and 2 winners here. These 2 losers were using small lot sizes, and these winners up the top were slightly bigger lot sizes. Overall, for me, this is a 100% winning trade. All 4 of these put together equals a win. We're entering very small and we just add in, bring that average price with us. So when we have that snap back, we get out with a profit. Obviously, there are going to be times we're going to need to take some risk off the table. I want to take my risk off the table by doing drawdown control rather than using a stop loss. If one of my positions go into 1% of drawdown, I might close off a third of that position. Now this ties back into manipulating our average price. Let's just say before we closed off this position, we were up here and our average price was about here. We don't like the drawdown that this position's in, this first position. We might close off a third of that position. Yes, we're going to take a slight loss, but that's going to bring our average price even closer up because there's less size at the bottom, more size weighted towards the top. Now our average price is really close to where price is at the moment. We don't need that much movement for it to become break even and then go in profit. Manually yourself as a trader, when you know what you're doing, you can see when price may be reverting and you can manually add a nice position near where you think the top might be. And that's going to bring your average price drastically closer to the top of a potential move. This does take practice, but these are just some other ways you can take losses rather than closing off the entire position in a loss. Obviously, there are a lot of rules you need to follow for this to be a profitable strategy. I'm not going to go too in depth in this one video because I'll be here for 6 hours. If this strategy interests you and you like long-term growth or a long-term edge over the markets, subscribe because I've got more videos coming out and I've got videos in the past I've already uploaded explaining mechanics more in depth, entries, exits, drawdown control. I haven't even talked about drawdown control in this video. That is one of the most important factors. If this strategy interests you and you want to try backtesting it yourself, I'll leave a link in the description for my EA or my bot. And try and backtest it yourself because it's a free demo for backtesting. Other than that, check out my older videos and I've got more videos coming. Cheerio!